You've been hearing about tariffs for a while now, but as of this week, they are officially in effect. The US has placed 25% tariffs on imports from Canada and Mexico, along with 20% on China, and now we're seeing the first real impacts across the industry. President Trump announced a 1-month exemption for automakers that comply with the USMCA trade agreement's content rules. This gives some relief to Ford, GM, and Stellantis, but questions remain about how long that relief will last and how it impacts the broader industry. At Automotive News, we've already covered what these tariffs are and how they might affect automakers, suppliers, and consumers, but today we're focusing on what's actually happening in real time. What's the immediate impact on vehicle prices? How are automakers adjusting their production plans? What's the response from Canada and Mexico? How are automaker stocks reacting? To answer these questions, we are bringing in several of our reporters who have been covering this story from different angles. One of the biggest concerns for consumers is pricing. With millions of vehicles imported from Canada and Mexico every year, these tariffs will add a major cost burden. Now, with a temporary exemption in place for some automakers, does this change anything?
At this point, it's hard to say exactly what the impact on vehicle prices is because the data that tracks vehicle prices from places like the St. Louis Fed is a little bit delayed. But what we can expect is that given that vehicles on the lot were not subjected to tariffs, and vehicles, even though with the 1-month delay, in a month will be subjected to tariffs, those vehicles are of higher value to the automakers and to dealers at this point. So the analysts that I spoke to expect that automakers and dealers will reduce the incentives on those vehicles and basically aim to sort of hold onto those vehicles longer, and that type of thing, it will raise the price on the vehicle.
Is there any indication of whether automakers will pass costs on to consumers or wait until the exemption expires?
The suppliers, for the most part, are not really in a position to absorb the cost of the tariff. They are working with thinner margins than the automakers. So contract dependent, most of the time, the supplier will be passing on the cost of the tariff to the automaker. That puts the automaker in a very difficult position because the automaker then has to decide if they're going to absorb the cost, and they've already been struggling with costs related to research and development for EVs and for advanced driver assist systems and things like that, or if they're going to pass the cost onto the consumer who is already fatigued by the price increases in the automotive industry and beyond with other consumer goods and inflation. So the automakers are facing a really tough decision with this. One thing that I think is really interesting is even with the month-long extension, MEMA says that it's still waiting to see whether parts which are USMCA compliant are also eligible for the month extension. So the Trump administration was explicit that vehicles are allowed to take advantage of this extension, but given that the automotive parts and components can move across the border multiple times and accrue a significant cost increase because of the tariff, it will be really important to see whether parts that are USMCA compliant are also allowed to take advantage of this month-long extension. The other thing that I'll say is a month is really not a long time in the automotive development life cycle. A lot of the industry stakeholders are saying it doesn't take a month to move manufacturing operations into the US or anywhere else. It doesn't take 6 months. In some cases, it can take years. So I think that the month-long extension is giving some relief, but largely sort of continues this uncertainty for the automakers and for other players in the industry.
So far, we're only a few days into these tariffs, but the real question is what happens next? How will automakers adjust? Will we see immediate changes, or will it take weeks or months to play out? And with this 1-month exemption, will that delay the real impact? With the 1-month exemption in place, how does this shift the expected timeline of these tariffs impact?
Yeah, April 2nd really looms large now. This reprieve, gives automakers the rest of the month to kind of game plan, continue to make their case to the administration about how broad-based tariffs might impact them. But April 2nd is really the date that everyone has marked on their calendar at this point. And not only by then could tariffs on Canada and Mexico on automotive imports come back into place, but also that's the date that the Trump administration is going to begin implementing reciprocal tariffs on trading partners that could also impact imports from outside of Canada and Mexico. In addition to that, the president has floated an automotive tariff that would apply to all automotive imports, regardless of country of origin. And that could come as soon as April 2nd as well. We don't have details yet on the reciprocal tariffs or the automotive tariff. but they've been thrown out there. April 2nd is the date that the administration keeps really throwing out there, is when a lot of the major tariffs are going to come into effect. Companies are planning for that date and looking at all scenarios and going to continue making their case for why they should get some tariff relief or maybe have some exceptions in place once those come in.
Automakers treating this as a temporary delay, or could it lead to further adjustments if an extension is granted?
Yeah, I think at this point, automakers kind of have to look at it as a temporary delay just because they've only been granted 1 month. That said, as they were a month ago when the first delay with the Canada-Mexico tariffs went into place. And then before that, when the president, after he initially signaled that he was going to implement tariffs on Canada and Mexico, automakers have been kind of game planning for all scenarios. Anything from tariffs being in place just for a week or two before there's a negotiated resolution, all the way to these being permanent. So at this point, I think they have to kind of look at it as being temporary, just because by the letter of the executive orders they are. But they're definitely game planning for all sorts of different scenarios, whether it's temporary or they're becoming accepted to all of the different tariffs that come into place. I think they have to kind of cast a wide net here and prepare for any and everything. The only other thing is for suppliers as well. They're just like automakers, kind of game planning for pretty much any scenario that'll come their way. For them, they might have a little less wiggle room than automakers. The big question for automakers, if tariffs eventually come into place, whether it's Canada and Mexico or other ones that'll impact them. For automakers, the question is, do they eat the tariffs, the costs themselves? That would obviously impact their profitability and that sort of thing. Or do they pass the costs on to consumers, which would raise the price of new vehicles? For suppliers, they've all indicated that they cannot bear the costs. And that goes for large suppliers and especially smaller ones. So they're going to be looking to pass costs up the supply chain. And I think the next month or so, we'll continue to see a lot of discussions between suppliers and automakers about who should pay for the tariffs, if there are going to be any price increases for parts and that sort of thing to account for that. So I think there's going to be a lot of pretty intense discussions between suppliers and automakers and tier 1 suppliers, tier 2 suppliers, etc. during this time.
Beyond automakers, these tariffs have major trade implications. Both Canada and Mexico have signaled that they could retaliate with their own tariffs, which could escalate tensions even further. How have Canadian automakers and suppliers reacted to these tariffs so far? Are they adjusting production plans, or are they waiting to see how the 1-month exemption plays out?
We haven't seen any adjustments yet, and the signals that we've got so far are that we won't probably see any, at least immediately. One big supplier up here is Linamar, and they basically said, we're not going to shift production. This isn't going to change anything for us in the short or really even the mid to long term. And automakers have signaled more or less the same thing so far. We don't have any domestic automakers up here. We have a couple Japanese automakers, and the big 3 operate in Canada. But so far, everybody's really just taking a wait and see approach to this.
And with Canada considering retaliatory tariffs, could this impact auto parts supply chains and manufacturing costs for US-based automakers?
Oh, it definitely will. We're going to see, retaliatory tariffs were already put in place. At least so far, they're still there. We'll see what happens, with developments. But the initial tranche of tariffs or retaliatory tariffs from Ottawa didn't cover much when it came to automotive. There was tires were affected, motorcycles, but the main bulk of automotive wasn't covered. But in 3 weeks' time, if there isn't a resolution to this, another $130 billion or so of goods imported into Canada will be hit with retaliatory tariffs, and that's a lot more gets hit. So there'll be vehicles, parts that are all kind of covered by those tariffs if they're in place that long. And then of course Canadian parts suppliers are importing an awful lot of parts into the US to assembly plants in the US, which are already going to be affected by the US tariffs, or at least up until things changed. So prices are going to rise, no question.
How has Mexico reacted to these tariffs so far, and what measures are they considering in response?
Well, it's very interesting because the approach of the new president, Claudia Sheinbaum in Mexico, has been kind of like being very calm with President Donald Trump, not provoking him, not getting into kind of heated discussions that maybe we've seen with Canada and Prime Minister Justin Trudeau. He has reacted in a very positive way to her. He says very nice things about her. And I've been watching her press conferences that she does every day. And her attitude is basically like, we're going to do everything we possibly can to prevent this from happening. Fighting fentanyl production and smuggling, fighting illegal immigration. We're going to kind of do whatever Trump wants us to do within reason. And, hopefully he'll come around and he'll realize that these aren't good for anybody. I thought it was really interesting something she said the other day. She said, these are going to hurt the United States before they hurt Mexico. They will hurt Mexico very deeply, very profoundly. But first they'll hurt the U.S. stock market. Then they'll hurt U.S. inflation. And so I think she senses that she has nothing to lose by going along with Trump, by being polite, by entering negotiations. And if bad things happen, then she's also said, we're ready to respond.
Could these tariffs lead to production slowdowns in Mexico once the exemption ends? And how would that affect the broader auto supply chain?
Okay, so Mexico has a very, very deep supply chain, right? Mexico's been like an auto partner for, more than a century, since cars began, is particularly with the 1994 North American Free Trade Agreement, which Trump negotiated, so it's now the 2020 agreement. Hundreds of billions of dollars have been invested by Mexico, by Mexican companies, by German companies, by U.S. companies, by Chinese companies, Korean companies, on and on and on, to create kind of a pillar of a 3-foot stool: Canada, the United States, and Mexico. Mexico kind of has cheaper labor, right? And so it makes different kinds of parts that are more expensive and more difficult to make in the United States or Canada. And so it supplies kind of a very important low-cost products to the U.S. auto industry. So obviously it would hurt Mexico. Mexico exports, 80% of what they make in the automotive industry, maybe even more. And so it would hurt Mexico, but it would hurt everybody, because think of all those parts that people are buying from Mexico in particular. You can't just find those somewhere else, right? The supply chain of the three countries has been created and nurtured over decades. And once you start pulling pieces out of it, everybody is going to suffer. Yeah. In terms of how Mexico might retaliate, the President Claudia Sheinbaum, she was going to hold this big rally on Sunday and invite basically hundreds of thousands of people, because that's kind of the way her political party works, is by mobilizing voters and mobilizing citizens. And she said that she was going to announce the tariffs that Mexico would put on the United States, or other actions that it would take. And now she said that she's not going to do that, right? It's going to be a celebration, kind of, and they're going to talk about some other things. But she hasn't really said like what they would do. So we don't have like a clear idea what we would do, because they've kind of dodged a bullet for the moment. So we'll just have to wait.
Whenever there's a major policy change like this, the stock market reacts. Investors are trying to figure out which automakers are most at risk and how the industry will adapt. With the 1-month exemption now in place, has that softened the market's reaction? Or are investors still bracing for bigger disruptions? Since the tariffs were announced, auto stocks have struggled, with most seeing declines immediately after the news broke. While there wasn't a single major crash, the market reaction was broad, with automakers, suppliers, and dealership groups all seeing losses. General Motors lost about $1.2 billion in market value in early trading, while Ford saw a decline of more than $900 million. Stellantis was among the hardest hit, with its stock dropping over 4% to $11.80. Public dealership groups saw similar downward movement. Group 1 Automotive, Lithia Motors, and AutoNation all declined by more than 2%, reflecting concerns over rising vehicle costs and supply chain disruptions. Suppliers weren't immune either. American Axle, Dana Inc., and Magna International all saw stock price declines ranging from 2.7% to 4.5%. This wasn't just an auto industry story. The Dow Jones Industrial Average fell 670 points the day tariffs took effect, part of a broader decline that started earlier in the week. The S&P 500 also dropped by 1.2%, signaling wider investor concerns. Auto stocks remain sluggish as the industry watches how these tariffs play out. The 1-month exemption for some automakers has provided temporary relief, but uncertainty remains high. Analysts warn that the next moves from automakers, as well as potential responses from Canada and Mexico, will indicate where the market goes from here. For ongoing coverage, visit autonews.com. So where do we go from here? These tariffs are now in effect, but the 1-month exemption changes things for some automakers. The bigger question is, what happens when that 1 month is up? Automakers, suppliers, and governments are all trying to figure out their next moves, and we'll be covering every step of it. Let us know what you think in the comments, and for all updates and insights, head to autonews.com.